Good morning. Thanks so much for tuning in to the trade setup right here. I'm Neeraj Shah, and let's try and go through uh, the news flow because there's lots of news flow, both stock specific and otherwise. Remember, the overall sentiment is a bit soft. So explosions were reported in Kiev, where Ukraine has said no trust in Mariupol negotiations. That whole town is surrounded but has not fallen as yet. Shanghai COVID cases have topped 23,500 as of Saturday, and Xi'an has started a partial lockdown as well. In fact, China has seen some deaths as well, which is not a good sign really. But both from what's happening to the populace, unfortunately, and also what Shanghai lockdowns and Chinese lockdowns do to the overall growth factors as well. Goldman Sachs has in fact gone ahead and said that they see a U.S. recession odds at 35% over the next 2 years. And oil has risen on news that the EU may phase in a ban on Russian oil imports. So key is, viewers, keep in mind, and actually I'll come back to the trade setup, but the key is that oil is up, yields are up, DXY is up, sentiment is down. So, and frankly, if you look at the valuations too, right, markets may have come off a little bit, but there's a chart on the Bloomberg terminal which shows how the S&P 500 valuations are lower, but they're still at elevated zones. So there is every chance fundamentally for people to think that, oh, the markets have a probability of coming in, of being lower as well. And the futures, by the way, are down, which is the Dow futures. Now the SGX Nifty futures as well. This is Asia, and you would probably see a mixed bag, but a tinge of red. SGX Nifty, though, is optically showing only a 0.5% drop. But if you look at the numbers, so it is 17,249 or 17,250, as the Nifty ended at about 200 points higher. So we're looking at a start which is between 0.5% to 1%. So about 200 odd points lower, I would reckon, is how we are likely to start off. So about 1%, right? Between 0.5% to 1%. That's the kind of cut that we'll see. The small respite for our markets is that IMD has said the southwest monsoon seasonal rainfall between June to September over the country as a whole is most likely to be normal. This is, a lot of people fear that after 3 good years, we'll probably have a dampener of a year. It could well happen. By the way, these predictions might turn out to be wrong too. But if we got to believe at this point of time what the IMD is trying to predict, and it looks like we could have a fourth straight normal year, which is actually a really good sign from a rural perspective. So that's great news. Now, what's the trade setup for the day? While this is a small positive, we are going to start off lower, and a synchronized inflation outbreak around the world just makes the case for a strong up move very, very difficult to envisage. To my mind, it's just virtually impossible. And we've been cautious on the markets for the last few days now. It's playing out as per script, but it doesn't look like there is a bounce in the offing. And today, of course, I don't need you to, you don't need me to tell you that we'll start off lower. The case is set, right? HDFC bank performance will also impact the Nifty and the bank Nifty today, despite last week's relative strength for the bank Nifty. Yeah, last week, both PSU and private banks did well, and bank Nifty was showing some signs of strength. But I think today, HDFC Bank might impact that sentiment. Infosys will impact the IT sentiment, and both of them will impact the Nifty sentiment. What might hold out is, of course, Reliance Industries. GRMs are at significant high, the highest since 2012, and therefore Reliance is your antidote to a Nifty correction. So keep that at the back of your mind. The support thus far has been that 17,500, which has got the highest put OI accumulation. But I think today it will found to be unfounded. The one area aside of Reliance, which may actually do well, are defense stocks and PSU names. Essentially, they'll keep the PSU basket in action, both defense as well as NTPC. So SAIL, Concor, NALCO, BEL, NTPC might all be in focus in the session today, and they'll keep the PSU basket excited. They have actually been the ones which have been the flag bearers of some upsides. Let's see if that were to continue. This week is an important week from a results perspective. ICICI Bank, and then the whole IT pack. So HCL Tech, Mindtree, LTI, LTTS, Tata Elxsi, Cyient, all of them come out with numbers, and therefore the non-Nifty IT also comes to in focus. Sort of HCL Tech, the non-Nifty IT and some large names out there all come in focus. And then, of course, the broking names in Angel One, ICICI Securities. So these were all the important ones that I thought that we should all be watching out for. What are the stocks to monitor today? Infosys, the numbers came out on Wednesday. So I'm not repeating the numbers, but I'm repeating the view. So Morgan Stanley stays overweight, but I think the views. So forget the rating and the target price. Okay, now you got, because as I said, right, there will be enough and other brokerages which will have a very different rating and target price. So it depends on who you believe. But the arguments that they are saying, so they are saying that they have mixed views on the strong FY23 guidance, and they would view corrections as buying opportunities. Will there be a correction? Yes, there will be a correction today, but Morgan Stanley would view these corrections as buying opportunities. So keep in mind that this is the overall view. They've lowered their FY20 to 24 estimates to factor in a 4Q miss. They believe the growth momentum should remain strong, supported by both very strong management commentary and demand and aggressive hiring that I believe all IT companies have done. And valuation is at a discount to TCS, and hence multiple should hold. Now the point is, viewers, the first line wherein they're saying that they would view corrections as buying opportunities, I think that's the key thing, because if you look at the Infi ADR of all of last week, there has been a sharp correction there. So can Infosys start off, uh, 4, 5, 6, 7% lower? I reckon it well can. The point is, should you use that as an opportunity to buy? That's the second question that I leave you with. And the more important question that I leave you with is that the collateral damage that Infosys will cause on some of the other IT names, should one therefore look at that pocket, at the wider pocket. I think that's the key thing that all of us should keep in mind. So just bear that particular point in mind as you approach Infosys trade today. HDFC Bank will likely have a bit of a corrective move as well. So this is, of course, the results when NII was up 10% and not a very strong growth number on the NII front. Gross NPA is at 1.17%, once it's 1.26%. So no complaints on the gross NPA for sure. The net profit, of course, was better than what the street was factoring in. But I think where the street might be a bit disappointed would be with this NII and the NIMs as well. The NIMs were lowest at least in a while, if not ever, and the NII growth was just about 10%. So I think both on the NIMs and the NII front, HDFC Bank is disappointed, and that would be something that the street may not sit well with. So CLS has come out the view there. They say that the 4Q was mixed, strong growth, lower OPEX, offset by further 10%, 10 basis points decline in NIMs, which is what they are factoring as well. They, of course, they believe though that NIMs will gradually recover as the retail growth picks up and the loan mix improves. They believe bank will upfront the distribution expansion costs in FY23, but they still expect earnings resilience to remain high. However, they prefer ICICI Bank, Axis, and SBI over HDFC Bank. So on a theory of relativity as well, they believe HDFC Bank should be lower. Now, keep in mind, the stock has given up all of the gains that it got because of the merger. Is the worst in the price? Remains to be seen. The other one is ICICI Pru Life, which I thought came out with a good set of numbers, and which is why I brought you the CLSA view again, which is a buy with the target price of 660. There are a couple of others which are more sedate, but I think the CLSA view is interesting. They say that the strong margin performance and the base is getting favorable. The 4Q results will dispel fear of slowing VNB growth, and they believe that the AP base, because it's favorable with ICICI contributing less than 25%, and the ULIP mix also normalizing, makes the case for people to look at this stock, also because the valuations are a lot more favorable. So watch out. ICICI Pru could actually be, if it is in the green, you know why it would be in the green. Now, Tata Power has announced the deal. BlackRock-led group, including Mubadala, have entered into the binding agreement will invest about 4,000 odd crore rupees, which is about 525 million, by way of equity and compulsory convertible instruments, which results in a final shareholding of about 9.76 to 11.43%. This is a good deal, but this is an anticipated deal, and I think it's a deal which is slightly lower than estimates, which is why I think the Morgan Stanley note is interesting on Tata Power. So yes, Tata Power has had a deal, but remember, the stock has run up ahead of the deal, and Morgan Stanley says that they have downgraded the stock to an underweight, even though they've raised the target price to 244 from 228. They say that with the green business monetization and Mundra merger getting the NCLT approval, all the catalysts are out, and the stock now lacks the catalyst for further growth. They believe that given international coal prices, their estimates factor in a Goldilocks situation for both Mundra and the Indonesian coal JV, which may or may not happen. And therefore, they prefer owning NTPC and Renew Power as compared to Tata Power. So that's their call. Do watch out for that one. Ambuja and ACC will be in focus, more so ACC, by the way, because media reports that wholesale-based sale of the 9.6 billion Ambuja cements. Remember, they have a direct control in Ambuja. Ambuja has control in larger shareholding in ACC, so effectively both. Now, various reports suggest that everybody from JSW to Adani Group to Shree Cement might be considered bidding this, a very large bid. So let's wait and watch who gets it. But Ambuja has had a run-up, viewers, remember, ahead of this. Not saying it cannot do more. In the last 1 month, Ambuja has run up about 14%, ACC about a couple of percentage points. So it'll be interesting to see if there is some further upside and how much strong is the further upside in Ambuja, and is ACC preferred over Ambuja? That's the point that you got to keep in mind. Look at that. Ambuja in the last 1 month has had a significant run up. Contrast it with ACC, which in the last 1 month has probably had a more sedate 4 or 5% uptick. In the last 1 week, about a 2% uptick. Not saying that therefore ACC should do well over Ambuja. It's a question that you got to ask yourself. Both of those could actually do reasonably okay. Virat, thank you for that. Now, in the Pasta gas, yet another price hike on CNG in Delhi by about 2.5 per kg to about 70.161. So remember the high gas prices, but the city gas distributors are actually passing these on to the consumers. It's bad for consumers per se. And when I first put out this news, so many people had said, "Oh, but there's only one small minor hike. How will they compensate? Will they benefit, etc.? Why would consumers get hit?" Now this is a third or the fourth hike, if I'm not wrong, in the last as many days. So to watch out for these companies. Some other stocks in focus include a Tata Steel, where the company is going to consider a stock split on May 3rd, along with the results. Textile stocks, the import of cotton yarn is fully exempt from customs duties. Indiabulls Real Estate, wherein Rakesh Jhunjhunwala's stake is now below 1%. But I think, contrary to what people are saying, I doubt Rakesh Jhunjhunwala has sold stake. He's not reduced stake himself. There's an equity dilution that happened in Indiabulls Real Estate, as a result of which his shareholding falls below 1%. So the fact is, yes, his shareholding is sub 1%. The narrative of him having sold stake is wrong. The stock may though react. Watch out for this one. And Television 18, because Viacom 18 has launched the new sports broadcasting channel. Sports 18 is what media reports can suggest. So do watch out for this one as well. Or the weekend is when and they have launched. The Money Control article said that. And some price and volume action seen in stocks like Credit Access Grameen because of their quarterly update, or Deepak Fertilizer, or Lloyd's Metal, or Jubilant Ingravia because of the 270 crore contract that they've signed. So all of these remain in focus. Net viewers, a bunch of stocks out there to focus on. Pick and choose. You can revisit this trade setup and replay this if you want to hear some of these. I've covered most of the stocks. There could be a few that I've missed, but these, according to me, were the most important ones. So the Nifty may get impacted any which ways because of global sentiment, as well as HDFC Bank and Infosys both, and IT being weak because of the Infi thing. The question to ask is this a weakness that you might want to buy in? Is what Morgan Stanley seems to be suggesting. So think about that. And Tata Power might actually correct a little bit despite this deal, because it's had a bit of a run up. You may want to look at some of the other assets and contemplate whether they are worth buying or no. And of course, do watch out for all of those stocks which are in focus today because of varied news flow around them. Sentiment, though, overall remains weak. Watch out for defense and watch out for some PSU names that could be in focus. Thanks so much for tuning in. Have a safe, profitable day ahead. And if you're stepping out, stay safe.